I'm Matt Bouchard with REIT.com, and I'm here in Dallas, Texas for NAREIT's Leader in the Light Working Forum. One of the subjects at this year's events is how NAREIT's Leader in the Light program can work together with the Global Real Estate Sustainability Benchmark, which was founded by my guest, Niels Koch. So Niels is also a visiting scholar with Cal UC Berkeley, as well as an associate professor with Maastricht University. So can you take us back to kind of where this all got started in terms of founding GRESB?
Since about 5 years ago, I've been working with colleagues at Cal and at Maastricht University in the Netherlands on research, academic research, where we look at the financial implications of energy efficiency in the commercial and the residential property sector. Now, without going into detail, but the kind of broad outcomes of the survey show that there's a relation, a significant relation in commercial as well as residential real estate between environmental performance measured by Energy Star or LEED and financial performance as measured by rents, occupancy rates and transaction prices in the marketplace. So taking that proposition to institutional investors, if you're a public pension plan or you're an insurance company and you're investing in REITs and you're a long-term holder or a medium to long-term holder, that basically means that you should be looking at the environmental performance of these REITs in order to be able to price in the environmental risk.
And you mentioned the institutional investors. There's 30 or so that are involved with
Right.
this. Is that how they're kind of using this data to make their decisions?
Some use it in their underwriting, so they won't invest unless you participate in the survey. Some investors in listed real estate will incorporate the scores in their models, so adjusting betas or adjusting growth rates. So there's different ways how different investors basically integrate the information. But one thing is kind of similar across the board is that the investors require or strongly urge their managers to fill out the survey, at least to get some information on the sustainability performance of REITs.
And looking at last year's benchmark study, was there anything revealing or shocking that came out of it?
In the commercial real estate sector, we don't know a lot about the energy performance of our properties. So in the first year, 15% of the respondents had some information on energy. Last year was 30%. So 70% of the 350 plus respondents didn't have a clue about the energy consumption or the energy performance of their properties. And I think, without measuring, you can't start improving.
And I know the 2012 benchmark is underway right now. How has it evolved over the years?
At this point, we ask 35 questions in an online platform which is easy to use. So REIT managers can just go online, fill out their details there, fill out the questionnaire, and that's it. So over the years, we've kind of streamlined that process. We're just asking the right questions. There's no stuff on the side, and that should make it easier for the sector to disclose and to participate.
And in your opinion, why is it so important that commercial real estate companies become better at being transparent in this area?
First of all, disclosing helps you to realize what you can disclose. So if somebody asks you what your energy consumption in your portfolio is and you want to disclose that, you soon realize that you need to go back to your assets to measure that information, to get that information out. So disclosing is basically a market force for you to go back to your assets to collect information. And once you start collecting, you can start to optimize properties.
Right. And I imagine that's something that the shareholders would definitely want to hear about. Is that where investors are looking for this information to kind of come back to them?
Well, it's really at two sides. So there's on the one hand there's the operational cost savings. That's really like a short-term benefit. That's where you can get your ROI on, hiring a head of sustainability, but also spending capex on getting information out of your properties. Second, there is the more medium to longer term perspective of risk of obsolescence. So if your properties are basically lagging the properties surrounding you, think New York, think San Francisco, and then think LEED or think Energy Star, you'll have problems leasing out your space. Ultimately, you'll have problems selling your space.
And you mentioned in one of your earlier answers the connection that you've seen between sustainability efforts and some of the commercial property metrics.
Right.
Have you also seen a link between sustainability and share price performance?
We just did a study called Portfolio Greenness and the Financial Performance of Real Estate Investment Trusts. And in that study, we look at the fraction of REIT portfolios that has been certified either by the EPA or by the US Green Building Council. And then we relate that fraction per REIT to the financial performance. So return on equity, return on assets, and ultimately also stock performance. So alpha, outperformance in the stock market, and beta. So how exposed the REIT is to systematic risk. Now we do find that if you increase the fraction of green properties in your portfolio, that leads to an increase in return on assets and return on equity. So that's interesting and related to our earlier findings at the building level. Now at the stock market level, we don't find outperformance for buildings that have a higher fraction of green space. But we do find significantly lower betas. So systematic risk for REITs that have a higher fraction of green properties in their portfolio is lower. So risk-adjusted returns are ultimately higher.
And U.S. REITs are, as we're seeing here in Dallas, are really starting to embrace this idea of sustainability. But in many ways, the U.S. as a whole kind of lags behind Europe and some other parts of the world. How would you sum up the strides that the U.S. is making in terms of sustainability?
Europe is driven by the government. The U.S. is driven by the market. And market forces are much stronger than a government can ever be. And that's what I see here in Dallas. So I see leading REITs that have very, very sophisticated systems in place, that have dedicated people, that have a dedicated CEO, dedicated C-suite, pushing top down, but also getting it bottom up, getting that message of energy efficiency through the organization. So at this point, Australia is leading the pack. Some of the UK large REITs like Hammerson and British Land are following at a close distance, but the US is catching up very, very rapidly.
For more on this and other news and analysis, be sure to visit REIT.com.